Sivaram joins us now. Let's take the conversation forward with him. Sridhar, good to have you back. Thank you for joining us. Well, everyone's been crying for a correction. The general view on the street is that this is a liquidity-driven market. Markets are going up on steroids, and that is not going to stay permanently. Why are markets going higher? Because if liquidity is the only reason why markets are going higher, then liquidity is going to be abundant for a long, long time.
So I would broadly agree that currently the market is going up on liquidity, and also there's a broad feeling that the next year, which is FY 21-22, is where the markets are looking at. Currently, everybody's assuming that the current year is a washout year. So the market's looking at growth numbers for the next financial year. And the current assumption is that we go back to closer to 90% of the previous financial year, and that's the broad assumptions being made. If as we get more data, there's any suggestion that it is better or it is worse, I get the markets will correct, not only for the Indian markets, even for the global markets. So I think that's how the market's positioned. I mean, my own sense is that the numbers will look slightly more challenging than what the market's assuming. So I would be, treading very cautiously from here on.
Sridhar, most of the companies, at least big companies, whether it is a SBI cards or a FMCG company, even cement companies, are saying that a lot of recovery has happened. A lot of companies, in fact, have gone on record and said that we are seeing a return of normalcy in our business almost to pre-COVID levels. So do you think this kind of an underlying recovery has surprised the market? Because in the month of April and early May, it appeared that everything is going to break, it's going to fall apart. So somewhere our market's pleasantly surprised with the kind of recovery we've seen?
So currently pricing in that recovery is going to be very sharp. But I would only say one point that, we've had a lockdown for a long period of time. So there is a pent-up demand. And that pent-up demand results in immediate, numbers looking very good. I think the test is what happens, say, a quarter or 6 months from now. And do these demand numbers sustain? I think that's where the challenge is. And I think that's why there is some apprehension also in the market in terms of the market recovering fully from where it was pre-COVID. So some stocks have recovered, some haven't. So I think that is the challenge. My own sense is that, it's not going to be that easy. Keep in mind that India's stimulus has been much weaker than many of the other countries. Obviously, we don't even have the room to give a stimulus. I mean, look at many of the developed nations, direct money has been transferred to almost 80% of the population. The companies don't need to worry about salaries. As we know from data and from other news sources, that's not the case in India. So I think this will have an impact at some point or the other. When is the question? I don't believe that we go back into a V-shaped recovery. It's going to be quite challenging. So that's my broad view.
Okay, you have pointed out, the fact that rural spends could be a theme to focus on. Within that, we're looking at agri, we're looking at autos. There's a basket of stocks that we could actually dive into. Where would you focus your attention?
I think of all the reforms that the government has announced, 2-3 months back, I think our internal house view is also that the agri reform that was announced, basically the Essential Commodities Act, the change in the APMC Act, those are basically the ones which will have, medium to long-term sustainable impact on the agri sector. We haven't seen too much of investments in the agri sector at all over the last 10, 12 years. We think that will change. This will have an impact on the rural income. So all the rural plays do benefit. Keep in mind that autos, especially two-wheelers, did quite well post-2009 when we saw a significant jump in the fiscal spend by the government, especially at the lower end of the motorcycles. We think the same could repeat again, which is two-wheelers could benefit thanks to the rural spend. Also keep in mind that two-wheelers also benefit because of this whole fear about personal mobility. So that helps. maybe things like seeds and agri-related other products like fertilizers will also benefit because of the increased surplus that rural economy has. But keep in mind that the number of players as for rural in the market is very limited, just 15% of the GDP for the country. So it's very limited. This is more derivative plays of what could help from there.
Fair enough. And within FMCG as well, given that we are anticipating some kind of oscillation, as you mentioned, though, essentials have stood out. For example, we've seen the highest sales of Parle biscuits. Would that be unlikely to change? So then would FMCG continue to be a safe pocket of the market?
So even within FMCG, if you see the commentary, the larger ones haven't really given commentary which is very good. The lower end products, the essentials, the food, these have done well. But the FMCG companies really make money out of their slightly higher end products, which is beauty and personal care and stuff like that, where the demand has been quite tepid. So the risk reward, if you ask me, in staples is not that favorable given the environment that we are entering into, which is why we for the consumer discretionary space, which is where the autos come. And between the consumer spend, we think we are better off positioned there than on the staple side.
Where would banks fit in, Sridhar? One side, everybody is saying that, look, what's happening in banks is great because now you're left with 3-4 banks in a large country like India, and those banks will enjoy pricing power. On the other side, banks are also raising capital. So 2 and 2 does not come together. If banks are getting consolidated and if banks have surplus liquidity, then why are banks raising capital?
Performance of the banks. Most banks are down anywhere between 20 to 50%, despite the recent rallies. So we remain underweight on financials. Within that financials, I think the larger private sector banks do stand out, that even though they are still down substantially from where they were pre-COVID, but they look in a better position. And I think it's a given that the NPA for the system is going to substantially go up. The question is, what is the number? Which is why we are seeing that every bank which can is raising capital, because you would need risk capital. I don't believe that this is growth capital, because the commentary from most of the banks is that they're raising capital for growth. Obviously, they can't come and say that there's a lot of risk which is associated with NPA, which could come. And honestly, even they don't know what exactly the risk is. So I think that banks will have to raise capital. If you ask me, the only safe spot within the financials to me is the larger banks. I would completely avoid HFCs and NBFCs. I think their business model is continuously getting questioned. And if they continue to have liability challenges every 2 years, that business model will significantly get questioned. Even though there are very good companies, I think over a period of time, they will also get converted, or they will look at converting themselves into a bank, because this business model is now getting challenged.
Sridhar, is there scope for manufacturing to come back, given that Atmanirbhar Bharat is now gaining, bigger and bigger pitch? Import from China would be difficult. Prioritization of local companies may happen. Up until now, Indian manufacturing companies have lost because of a lack of competitiveness. But if there is a government mandate to change outsourcing or reduce dependence on China, how will this benefit Indian manufacturing sector?
So I think Indian manufacturing, we've seen in select pockets. I mean, you look at autos itself, that we have competed with the best of Chinese as far as domestic consumption is concerned, and on the export market as far as two-wheelers are concerned. So There are pockets where India has done well. Chemicals is another space which we like, where India has done well and is competing well in the global markets. We've seen even the pharmaceutical space where Indian manufacturing has done well. So there are pockets or niches which the Indian entrepreneurs have created. And I think it's only if more and more benefits are given, the ease of doing businesses is improved. India does have a significant opportunity because of this whole China angle and the US-China related trade wars. But as we speak, I think India isn't getting enough of what should have come our way. I think smaller countries like Indonesia, Vietnam, Taiwan, many of them are taking a larger pie of the shift that is happening right now. Some of the changes that have happened over the last 6 months do benefit, especially the changes in the taxation for a newer entity. So we would see, but this is a gradual process. I think the true picture will emerge only in the medium term, maybe in say 2 years' time. But I do think that manufacturing can come back.
Sridhar, whose guitar is that behind you?
That is my guitar. I play the guitar. Something to keep sanity given the volatility in the market.
Absolutely. Next time, perhaps we'll get you to strum some tunes. But
Sure.
you know, the only music to the ears there seems to be Telecom. And I was just looking at the idea ARPU numbers as well. And Nikunj and I were discussing, I mean, irrespective of what the idea story may be, whether the company will get dissolved, stay or not, who knows. But, you know, just the kind of money that we are paying for all our data packages right now is a clear indication that Telecom is a story which is here to stay. Aside of that, there is tractors which is holding out. I was just looking at Escort's monthly sales data. They're saying that there is great demand that, you know, they're seeing. And perhaps some of the auto ancillaries in particular, like battery makers, which again is a play of pent-up demand after lockdown. Just about everyone's going to get their cars and, you know, two-wheelers fixed.
Yeah, so telecom is a sector that we've been invested for a while. We like that sector. I mean, it's a very simple story. You go back 3 years back, industry revenues were over 2 lakh crores. As we speak, the industry revenues are about 1,55,000 crores. So despite, you know, significant increase in usage of, you know, data, the usage of or more services being provided by the telecom operator, our ARPUs are $2. I mean, $2 ARPU really cannot sustain. So our own belief is that we'll see significant improvement in ARPU. Number of players have come down substantially. And we think this 2.5, 3 players is a fair number for any market. I don't think even the government would want the number to reduce further from here. So we think that this market is looking very interesting. ARPUs will go up. And a 50,000 crore incremental revenue for the sector, we think can happen over the next 12 to 18 months. And the market gives about 10 times EV EBITDA for telecom companies. So that's a fairly large market cap to be made in this segment. So we really like telecom. As far as tractors, I mentioned about the rural play that we like. But I would just give you one caveat on tractors in particular, that India sells around 800,000 tractors a year. And just to put that in perspective, China sells about 600,000. In the entire auto segment, this is the only segment where India sells more than China. And the arable land of China is much more than India. So we think that there is a sort of bubble being created in the tractor segment because the easy money that goes in because part of the priority segment. Many of the larger unlisted players in the tractor markets do believe that India has sort of hit a air pocket right now, and it's very difficult to sell more than 850,000 tractors a year. So I think in the short term, it is looking very interesting, but in the medium term, I would still prefer, the two-wheelers or the passenger vehicles as far as the auto segment is concerned.
Okay, Sridhar, great to have you on the show. We'll chat again soon.
Sure.